banks whisper his name. Ripping forex, indices flex, numbers dance. What's coming next? Green lights flash, P&L stretch. Risk managed, he never sweats. West fact buzzing, traders peep. Lessons deep, no time to sleep. Market's a beast, Lee got the leash. Feast at the feast, his game's elite. Market structures is domain. Leads the king, they know his name. Breakout Sharpie fuels the flame. Trading charts is not a game. Pip by pip, he stacking high. Mean reversion, banks comply. Leads the reason markets run. Leads the reason markets run. Candles lit, wicks on fire, spread so tight the stakes get higher. Institutional flow, he's the supplier. Positions held till charts retire. Data feeds, news he reads, Fibonacci maps to see. Supply demand his mind exceeds. Trades ignite like lightning speed. Stop loss tight, take profit wide. Leads precision, unmatched drive. Liquidity pools, banks coincide. Retail's blind, leads the guide. Charts unfold, the stories told. Entry bold, accounts in gold. Trade by trade, the wins are sold. Market alchemy, legends mode. Whoa, 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 whoa. To run. Lead the reason markets run. Lead the reason markets run.
Digital sheen, open in range. His weapon so keen. He's the structured trader, a market machine. Bank moves, he mimics, he plays their game. In mirror fashion, glory is his claim to fame. Market structure king, watch him do his thing. Pips and points, the profit sing. Trading like the banks, he's in control. Leaves the master filling his bankroll. Leaves the master filling his bankroll.
Good morning. How are we all doing? Oh, I'm in the wrong corner. What am I doing over there? Hang on. Let me move myself over there. There we go. Don't normally go in that corner. I was doing a video for the MST Academy, and I realised that all the content in the MST Academy is on the left-hand side. So I needed to move myself onto the right-hand side. There's a new page up now on here, just for those that aren't in the Academy. Just explaining everything you get in a little bit more of a summary about everything. Because there's tons of content on there now. So go and have a look at that at your leisure. Morning, everybody. Who's here? Road. Mayor. Morning. Cord. Marco. How are we doing? So today is Friday. Markets have been very weird this week. We've had days of choppiness and huge ADR day yesterday on the DAX. We had 200 ADR yesterday. ADR is 230. We did 397 yesterday. The ADR wasn't 230 yesterday because obviously yesterday is now included in ADR, so the figures are elevated. But huge move on the DAX yesterday. The ORB yesterday was here. So that was your first 5-minute candle. I've got my pen. Where's my pen gone? Open sesame. Don't want to buy your pen. I've got your pen. Why does it keep advertising to me when I click on it? Here, come and buy something you've already got. No. So yeah, that was your 5-minute ORB. So we had a fake out to the downside, which stopped out immediately. And then the 30-minute ORB broke long. And yeah, just didn't stop all day. There's not really any way you couldn't make money out of this yesterday. So your initial target 2R was, I think it was hit here. I can't remember. I'll have to check. Then we had the pullback, which was nowhere near big in any way, shape or form. We had 15 minutes of pullback on it. So if you had a trailing stop on it, wouldn't have got hit. And then we just went straight to ADR. So target, I think at ADR was somewhere around about here. You got double. But I mean, I got out at ADR. So yeah, lovely when you get them, but hard to stay in them. So let's see how we get on today. News-wise today, there's not a lot actually happening today. We got Trump speaking this morning. Oh, it's already happened, obviously. 1:15 this morning. What's he doing up? Obviously, it's in New York. It's a different time. But anyway, GDP for the pound came out this morning, very bearish. It was a negative 0.1. We were forecasting to go up. We actually got the same as before. So GDP down. So if you look at the actuals on GDP, we're not doing too bad in the UK. It's declining, but it's not hideous. When you get 3 of those in a row, 3 negatives, that's the official definition of a recession. So we'll have to keep an eye on it. It's the first month of negative GDP, but we'll see how we go. So if you look at the pound pairs this morning, we've got a little bit of a downtick going on, but nothing dramatic. So that's all we got really. Sort of 16 pips, which is like quarter of an ADR is 13, so it's roughly quarter of an ADR movement basically to the downside. So nothing particularly dramatic for the pound. It has obviously been negative, but not massively. ADRs today, there's nothing. I'm not surprised because yesterday we had incredible ADRs all over the place. So there's a massive move all over the place yesterday. It's kind of like the market was having a shift after FOMC. Obviously with FOMC, we've had negative dollar. Everybody's jumped ship on the dollar, which is totally understandable. So FOMC, obviously we've had the drop kicking in. As you can see, the dollar is in massive decline at the moment. The interesting thing is normally when you get a decline like that, what you tend to see is a massive rally in the stock markets. So you can see obviously, whoops, wrong one. With the NASDAQ, we have had literally 2 days pretty much of sideways. We had a little bit of an uptick there, but we gapped straight down again. The Dow is doing very, very well, but the S&P and the NASDAQ, we are in total sideways mode at the moment. They just cannot get started at all. Gold obviously will be rallying off the back of the US dollar. Gold is just a US dollar cross. So obviously if the US dollar goes down, gold goes up. So yeah, interesting times at the minute. So we got 5-minute ORB in at the moment, 346 on a 348 minimum. So just shy. Depending on your broker, that may well have triggered a trade for you. I'm working on 15% of ADR. If you're working on 20, which is the default, then you won't have got a trade triggered on that. But you will be getting one on the 10-minute range there. There's no gap fill today on the DAX. So we'll see where we go. But after yesterday's move, it's a very difficult call today. There's a probability that we are going to take a partial profit on what we did yesterday before potentially continuing higher. So there's lots of downside potential. Watch this area here, which is basically where we stalled out. It's the first real stall out after the break. That was the actual first stall out after the break. But we closed the gap and then we stalled out here. We broke and then we tested that area again and rallied straight off of it. So this is a really good support resistance area here. So if we break down into that, that would be a good little long potentially, roughly a 38 retracement. Your 50% retracement is previous day's high, usual stuff. So yeah, we'll see where we go. But at the moment, looks like the market wants to rally long. So there's no ADRs. There's quite a few weeklies. Silver's hit weekly, 150% of weekly range. So really big extension there. Other than that, there's not a lot else. US dollar Swiss to the downside. I wouldn't be too interested in getting too many longs on the US dollar at the moment. We'll see how much more they take out of the dollar. It's come beautifully off of a previous weekly support on the US dollar Swiss. That's extended to 150%. Sorry, not 150, 25% of ADR, of AWR even, average weekly range. So that's your weekly open from 2 weeks ago, or your weekly low, which is the open from 2 weeks ago. And that's this big propulsion move that started this V-shaped recovery. So this is where obviously the buyers stepped in, and we have just stepped straight back in again. So there is a chance that we might get a push back up on that. If you're going long on it, you want to be watching last week's low, which is the accumulation phase there. We have got propulsion targets up there, which is a 50% retracement on that leg as well. And that's a 61.8 retracement at the top propulsion targets. So if you're going long there, or there are your upside targets. You can scale in from there. If we get all the way down to there, we're likely to do obviously a pullback. So we're very, very nicely extended. I think I am long on this at the moment. No, I didn't take this one actually because I'm in the CAD Swiss. CAD Swiss, US dollar Swiss, pretty much the same thing. So I'm in so there's your US dollar Swiss extension on the hourly. So 10, 21. And the CAD Swiss basically, when it loads, very, very similar move. I'm in the CAD Swiss instead of the US Swiss. So see if we can push back up. So that is yesterday's high. So I'm just going to see if we can test yesterday's high today. That will be a 50%. Again, just 50, looking for a 50% retracement on the leg. Something around there. See where we go. Right. See what's going on with this DAX. So the 10-minute range is in. 10-minute range is closed right on the high. So the EA does not take these. Because as you can see, and this is an exact example of why the EA is programmed not to take these. That was your close of that candle. The next candle opened above where the limit order would be placed, or rather the order would be placed. So the danger is obviously what happens is you get a limit order placed, market rallies away, makes the move, comes back, triggers your limit order on the way back down and stops you out. So in my back testing, if we close on candle high, it's negative most of the time. So it doesn't take those trades. So if we sit around now, we're creating a propulsion gap at the moment here. If we sit around now within this range, we'll be taking a 15-minute ORB long. Yeah, there we go. Morning, everybody else. Lucius, Chris, Aussie dollar, US dollar. It's pushing up at highs at the moment. Obviously, the Aussie dollar has been pretty strong. I'm short Aussie at the minute. So yeah, Aussie dollar has been pretty strong recently, as we know. Lovely move this. Beautiful. It hasn't even had a profit taken the last week. Look. So we kind of hit this area here, this previous monthly high, and we hovered around the monthly high. Haven't undone any of this move at all yet. So we're coming up into the previous month. So this is that's your 4-month high there. So got an area drawn on the chart there. We just got to the 4-hour. And what that is, maybe that's from another chart. So there's your high on the 4-hour. That's your 4-month high, basically 6-month high, whichever. So you're roughly 125 ADR away from reaching that at the moment. Yeah, be looking for profit take on this one. There's a couple of areas, depends on where if you're in the short, which you would have been from back here. Profit take on this, depending on how many positions you got in, that is a nice easy target. So this propulsion gap, if you've scaled in evenly, that propulsion gap there should be roughly about a break even. Target I would look at as being last month's high. But you can see how range bound this is. We're going to need some strength in this US dollar, and this is the problem at the moment. Market is not happy with the dollar. So it's going to be difficult. You're going to need some Australian weakness. We've got no news obviously coming up today to drive anything. So it's just wherever the market goes today. But yeah, shorts down into here, which is a 50% retracement on the leg, roughly. Actually, not quite yet, but if you hit that RSI, that previous monthly up there, and we get the sellers step in here, that would be where I'd be looking to go. How is the new position trader EA doing? Good. Yeah, it's running on this account here. So yeah, it's working fine. It's on my VPS though. Not running on here. It's basically, it's not really, I'm not going to call it the position trader EA. It's a totally different thing. It's a correlation EA basically. So it's the whole purpose of that new EA is for correlation, so that we do not take correlated, or try not to take correlated trades as much as possible. But it is obviously doing everything. So yeah, it's working. That's all I can say at the moment, which is good. Euro New Zealand in with 3 positions. Let's just quickly look at this DAX a minute. Okay. Right, and new highs, aren't we, on the DAX? So the monthly's within ADR today, which is 24,510. Oh, that's the S&P. What am I doing? Why am I on the S&P? Close. Nearly took a trade on the S&P. Right. Yeah, that's better. So that monthly's 25,425. Somewhere about there. What's that? That's 1.15. That'll do. Previous close is 1.16. That will also do. Okay. What was I looking at? Euro New Zealand. Right. Oh, wake up. So I'm not on the wrong charts today. Euro New Zealand. Let's try that again. Not really doing anything at the moment. In 3 positions long. So I guess you're in from back here. Yeah. It's just sitting there doing nothing, isn't it? It's one of those which is just grinding away. So you've been grinding away for 2 weeks, costing you loads of swaps. Obviously, target is going to be this monthly level and this propulsion move, which broke through that monthly level. So that propulsion gap there is a monthly resistance break. I don't know what month that is. 2 months ago, isn't it? So it's a 2-month high. It's not really a very clean break at all. It's been mucking about through that for for days. So this is just a large propulsion gap. Obviously, it's broken that low, it's broken that low, it's broken that low, and it's virtually broken all of these lows here, and then retested and they resold it. So that's your target to the upside. So that's where I would expect it to be heading. Safest target to go for is this high here, which is the retest of the propulsion move. So back up into there. If you're in 3 positions on this from here, so your first entry would have been in there. You are 99. Move down 300. So you're roughly an ADR between, aren't you? And that. Somewhere in there and somewhere in there. So your average is going to be at this propulsion move, isn't it? So you've got two options. You can either go for the home run, which will be up here. That'd be my main TP up there. TP here, which is your weekly high. That is going to get you roughly to break even. So what you could do is take this position off here, take off 50% of that position there. So close out, drawdown control. And then you're left with that position and 50% of that position, which means your average will be somewhere around about there, which means you can take the remainder off when you get here. But it's a bit soon. If you've only got 3 trades on the position, it's too soon to be doing drawdown control. Unless you want to. You can do drawdown control whenever you like. If you want to do drawdown control after 3 trades, that's aggressive, and it's going to keep your drawdown low because you're going to be getting out and banking profit more regularly, which means you're going to have less size open, which means you're going to have less drawdown. There's nothing wrong with doing that, but that is potentially where we would bounce if this is new structure that we're forming to the downside. You've bounced off of this monthly level and off this support here, look. Yeah. So this area here was resistance. Broke through it, retested it. We came back, broke through it, tested it, tested it, tested it, broke out, tested it, tested it, tested it, broke out, tested it, tested it. Yeah. So if you look at it from this perspective, potentially we're going into a range, which means there's no reason why it shouldn't hit that. But when you've got a large propulsion gap like this in there, something has fundamentally shifted, which is probably driving it more short. So potentially we could be coming back down and retesting this area down here. That's my thoughts. I can tell you one thing. It's either going to come down and it's going to test this area and this area here, or it's going to come up and test that area there. One of those two things is guaranteed to happen. You deal with whichever one it does. Always nice to hear your opinion. That's always good. How it with swaps? How it with swaps? I don't know what that means. How it with swaps. Morning, Michael. Aussie, New Zealand, also no big take profit was done. Correlation EA with swaps. It is what it is. I mean, swaps are swaps, aren't they? It doesn't do swaps. It doesn't pay any attention to swaps. There's no swap filter in that EA at the moment. I'm still developing it. I don't know what to do with it at the moment. It's just what I wanted to do was try and what the plan was with that EA was to rebuild long on the DAX. Was to rebuild the position trader EA. In a different, just update all the logic and everything in it. What actually happened was I started with a correlation filter and then put the EA logic in from the position trader EA. But I've left out half of the stuff that I don't use, basically. So it's a different EA. It doesn't have market reversal alerts. It doesn't have 3-bar reversals. It just literally uses moving average cross entries and it uses RSI. But I'm going to build in a multi-day run filter to it. As it's got ADR, but I don't really use ADR for reversals now. So it's more focused on getting in on correlation. That is the main thing that it does. So if I've got it on this terminal. So I don't really want to do this because it's going to start taking trades, isn't it? But basically, yeah. So what it does is it's multi-symbol. So you can't use it in the way that you can use a position trader. This is why I don't think I can replace the position trader EA with this because it's not, I've called it position trader as V8. This is the 8th development version, correlation. But the position trader has buttons on it. It draws things on your charts and it runs on a single instrument. This does not do that. This basically, you put it on one chart on any time frame you want, and it will trade all instruments, analyze correlation, and do everything that you need to do. And it also does all the drawdown control automatically for you that the trade portfolio dashboard does. So it does all the drawdown control across multiple symbols, single symbols. It does everything. So this is more of a whole position trading management system, but you can't enter trades with it manually. Yeah, it will take trades based on RSI extensions and ADR, but you cannot press a button with it. So, and I can't do that with this EA because this EA runs on one chart, and it yes, it runs on one chart basically. So you can't flick charts, you can't change charts. You put it on a chart, you leave it, and you set it and forget it. So it's a different thing. Is what I've built, and I'm at the moment it's working fine, and I'm obviously monitoring it closely to make sure it's doing what it should be doing, and it is doing what it should be doing. So on that pound Swiss, it did exactly what it should have done. Aussie Swiss there, it did some drawdown control by the looks of things on Aussie Swiss. Oh no, that was a closeout. Yeah, so that Aussie Swiss was a closeout. Yeah, it's working, but I don't know what it is yet. It's kind of like I've made Frankenstein's monster. I've taken a bit of position trader EA, a bit of trade portfolio dashboard, a bit of advanced drawdown control, a bit of my correlation dashboard that's on the website here. So it monitors, does all the correlation analysis for you. I'm using the 4-hour time frame on 500, and I'm using a correlation threshold of 60, I think, at the minute to test it. So it monitors all of this. And it does all of that stuff, but it doesn't do the same as the position trader EA does. It does, but it doesn't, if you see what I mean. I don't know. I've invented something new, and I don't know what to do with it. Anyway, Aussie New Zealand you wanted to look at, didn't you? Sorry, I'm waffling. This morning, Friday. Yeah, so Aussie New Zealand, obviously we were on the back of this parabolic run. We didn't get a decent profit take here at all. We had a week where we pulled back, and then we pushed up again by the end of the week. So the week opened there, we pushed down, and we pushed back up. So that candlestick looks like that. So we did get the pullback, last month. We did get the pullback there into that previous resistance, and it's bouncing. So it looks to me like market structure is breaking down now. So target to the downside on this, I would be looking about 225 ADR, so 1.13571. That would be where I'd be looking to test. So after a parabolic move like this, you'd be looking to test the 72 moving average. Parabolic move, test 72 moving average. This is a massive parabolic move. So probably come back and retest these highs, which means that propulsion gap to the downside is your overall target. It's just this week, obviously, we've had good news for the Australian dollar. Well, not good news for the Australian dollar, but we've just had news that is not negative as such for the Australian dollar. So we had the employment change, which was bearish, but the unemployment rate, which is the thing that the market monitors, that's one of the big four leading indicators. That actually came out better than forecast. We were forecasting unemployment to go up, and it didn't. So that's really good for the Australian dollar. The CPI is good for the Australian. Well, it's not good for the Australians because it's gone up, but that means interest rates are going to remain where they are, which is bullish. So we've had the four main indicators, leading indicators, are interest rates, the unemployment rate, inflation, and GDP. So out of those, you have two of those which have been massively bullish. Yeah, they did not change the interest rate. Bullish. It's not bullish or bearish. It's just neutral. And the GDP numbers, they came out as a negative, but GDP is the fourth ranked out of the four. So the only thing you've had going bad really for the Australians is their GDP's dropped. So what? Everything else is going the other way. So that's reason why we haven't come down. But what haven't we also done? Rallied. Yeah. So this month, if you look at it, we are going up, but Not much. Yeah. Look at these tails, especially yesterday and the day before. Indecision. So we've got upside rejection at the propulsion move. So we started selling off with a reversal. We retested, gave us the M pattern, the propulsion move to break through that low. Then we've tested that. We've come up, we've tested it, we've resold it. We've resold it. We tried again, we've resold it. We've resold it. We tried again, we've resold it. Yeah. It's really struggling to go long, which makes me think we're coming down to test the quarterly moving average on this. This propulsion move to the downside is probably your target, which is just over 225 ADR. So that would be my downside target initially is here. Potentially that monthly, which again, if you're going to test that monthly, you might as well come and test this propulsion. But who knows? A lot of things can change. This is the thing about trading. Fundamentals change. The fundamentals on the Australian dollar were massively bullish. We were expecting them to be bearish and they didn't come out bearish. So therefore, you buy it. The New Zealand dollar. Also, this one, it's one of those combinations where things just tend to go the opposite direction. Retail is the only thing that's come out bullish on this, but their interest rates, they can't change, which makes them neutral. So they're at target. So they're not going to put them up. They're not going to put them down. The unemployment rate isn't changing. So it's neutral. Yeah. Your CPI numbers came out as bullish, which means that potentially you might get some interest rate change to the upside at some point soon. And GDP was bad. So it's a very mixed bag. So New Zealand dollar is kind of neutral at the moment. Yeah. Slightly bullish, but it's not, it's sort of in the middle-ish, isn't it? So it's difficult to tell with this one. This could go either way. The Aussie New Zealand does this. We've seen parabolic moves in the Aussie New Zealand before, look. Yeah. Look at this one here, right? So this is a great example, look. Massive bull move, stuck. Massive bull move, whoops. Massive bull move, stuck. Second leg, 50% retracement. Second leg. Massive bull move, stuck. Second leg, 61.8, probably 71.9 retracement. It's ready, definitely ready. But we just need that catalyst to drive that profit take move. At the moment, what they're seeing is, think of yourself as a bank, right? We're going to buy the Australian dollar because its fundamentals are looking good. Excellent. New Zealand dollar's got weak fundamentals. Buy more Australian dollar. Yeah. New Zealand dollar hit interest rate targets. So they're not going to be increasing interest rates. Okay. The Aussie's CPI's gone up. Okay. Buy more Australian dollar. Yeah. We've got loads of profit. Every time they've had a decision to make based on a fundamental, the fundamental has told them to buy more. And they will keep doing that until there is either no one left up there willing to sell them Australian dollar, or a fundamental shifts. The latter, the first one is the most likely. When you get a parabolic move like this, there is not going to be anybody else that's going to want to sell this. So if you can't find any sellers, you can't buy it. And if you can't buy it, you have no choice but to take profit on your order and sell it. And as you sell it, the sellers start to step in. And as the sellers start to step in, it creates interest. And you get one fundamental that goes the opposite way to the New Zealand dollar or the Aussie dollar, and that thing collapses. Or you get something about the New Zealand dollar putting their interest rates up to 2.5 because inflation rises. Bang. It needs a catalyst. But, we don't control those. So long breaks underway on the DAX. Fairly nice, clean price action today. Bull, bear, bull, bear, bull, bear. Inside bar at the moment. I've updated the risk reward tool. Just for those that are interested, I'm going to try and get this on the marketplace today. So it now shows your P&L, combined P&L in there. This is combined P&L of all positions on this symbol. It also now plots in your stop loss, your P&L, and your target as well. So it visually paints on your lines, yeah, when it ticks. There you go. So it adjusts your stops and TPs visually, so you can see the amount of money you're going to make on your stop loss, how much money you're in profit or loss at the moment, and that. If there's more than one trade on, I don't want to buy it up here, I'm not going to do it. But if there's more than one trade on, it will draw in your average line as well. So it plots. You've got the option now to plot P&L on every single line on the on there as well, and obviously it gives you your total P&L within the dash as well. So I think this is ready now. So I'm happy. I've been using this and testing this for days now, and it's working. So I'm happy with it for MT4. I just wanted to add this in yesterday because I was finding yesterday. I was trading yesterday. I had a really good day yesterday. And I was just scalping, and I found myself looking at this and then having to flip over to my trade portfolio dashboard to see how much open P&L was. So I thought, I want that on here. So you've got options basically to turn it all on, turn it all off. Yeah. So all this can be turned on and off in here somewhere. Oh, sorry, that's the wrong thing. That's an indicator. It can be turned off and on here. So you can show the P&L on each trade, which is here. You can show the TP and stop loss amounts here. So you can have it just showing that, showing all of it, or just showing those and not showing that. You can turn it all on off. You can change all the colors. You can change the size of it. You can also put a line on the entry. So if you decided you actually wanted a line on the entry, which I've got, you can do that as well. Yeah, make everything huge so you can see all big money, all that sort of stuff. Anyway, that big do I? Might have it a bit bigger actually. That's nice. There you go. And then just stick him away up there when you don't need him. And I don't want my stop loss there. Stop loss down at the open. Right. Correlation EA with swaps. Yeah, we covered that. How many trades do you think is normal for H1M5? We covered this. We literally covered this in the MST Academy. Were you not in there? There is your answer. Have you read it? Have you screenshotted it? Gone. Morning, Franco. Which MA uses the new correlation EA? Whichever one you want to. It's configurable. Morning, was check. Is it also a good sign for Aussie New Zealand that I didn't have a massive pump? It didn't have a massive pump with the news, meaning it's ready to go down. Yeah, exactly. So that's what I've probably answered all this already, haven't I? We've had decent news on the Australian dollar, and it's not gone, has it? Yeah, that is it going on good news. There was no propulsion move. Yeah, so when you look at fundamental shifts, yeah, fundamental shifts cause propulsion moves. Yeah. So when you get a big news event coming in that is bullish, you get a big move. Yeah. Whichever way it may be. We've had big move to the downside. We've had decent news on the Australian dollar. It's not done it. So it means that they are struggling to find people to sell this to sell this at the moment. We've had the exhaustion move here. So that is your sort of climactic move. Yeah. So we had this massive rally for, I think it was 12, 14 days or something. And then we had two inside bars back to back. Yeah, and bearish. So it's the two, that's, if you're familiar with Al Brooks' stuff, that's a 2IB, two inside bar setup. And the two inside bar setup typically is before the next big move. And what they did, unfortunately, in this case, was they triggered both ends of it on the same day. But, you know, that is a massive bear rejection. So when I talk about running out of sellers, there's always sellers. There are always sellers available in the market. There's always banks and institutions with price orders at levels based on their books, their algorithms, how they're trading, basically. But what you'll find is, if I want to buy 1 million here, and there's 100,000 there, 100,000 there, 100,000 there, 300,000 there, 500,000 there, what I've got to do is I've got to push price up to get my order filled. And when I've done that, all of those orders have gone. There's no one left there. So that's why you get the exhaustion move at the top. This is why everybody focuses so much on pin bars and shooting stars and hammers. If they appear here at the top of a move, they are incredibly impactful. If they appear here in the middle of nowhere, completely ignore them. Morning, Holly, Franco, social media. I don't know what I was talking about when you said that, but why the Swiss is so strong, I don't know. It's as I said at the beginning of the week, we're coming up to Christmas now. Markets over the Christmas period, it's really, really hit and miss and random. But a lot of the time we get 2 weeks before Christmas and it's dead. This may well be the last week I trade. This might even be the last day I trade. Well, it's not. I'm going to see what happens on Monday and Tuesday, but it starts to really slow down. So what you tend to find is as institutions go flat, or flat as they can, particularly on the speculative orders, as they start to go flat, they need to put capital somewhere. Yeah. So where do you put capital that's safe? Swiss franc, yen. Yeah. So you tend to find that you get moves into the Swiss franc and the yen. Obviously, they are the safe haven currencies. When there's either times of crisis, wars, pandemics, anything that's going wrong, basically, earthquakes, tsunamis, whatever. Or you just need somewhere to put your capital while it's being quiet. So where we as traders will tend to go flat, we haven't got any longs on, we haven't got any shorts on, we haven't got anything on. Banks and institutions don't go flat. They tend to put their money where it can work, and it will work in the Swiss. And it's also safe in the Swiss. So if anything kicks off, if Russia invades Poland, it doesn't affect the Swiss. The euro will go crazy, but the Swiss is not affected. So not saying they're going to invade Poland. I haven't got spies out there that know what's going to happen with that. But, once they've annexed everything they want out of Ukraine, where they're going to go next. But, so that's possibly why we're just seeing the pre-Christmas move starting to happen. Japanese yen powered up at the same time. You can always tell if it's a safe haven run. Because you'll find that the Swiss and the yen will tend to move together, and you can tell that's basically just moves into safety. But it may not be. It might just be something strong in the Swiss. There's nothing particularly. I mean, it's not massively strong, is it? If you look at the Swiss franc, what is this? Just a profit take on the previous leg of movement, isn't it? It's not really anything unusual. It's just normal price action. Yeah, it's an A-shaped recovery back into previous support, previous resistance, turn support. It's just normal movement. Just all happened over 2 days. This last couple of days, as I say, the markets have been choppy as hell, especially the stock indices, and they all came to life yesterday. That's what we're waiting for, isn't it? Those big days that pay us. Oh, I was just saying, I was trying to work out what that red line was. It's the stop loss of my short order, isn't it? I was like, I'm not break even on it. Weird. Okay, so seeing a little bit of rejection on the DAX, a little bit of indecision. So we got an inside bar, followed by a bullish bear bar, followed by a bearish bull bar at the moment. So market indecision for the last 15 minutes. Can't really decide what to do. Not a lot of strength at the moment. Next week, Tuesday and Thursday are non-farm payroll from 2 months. CPI scheduled. Do you think the banks will be with full liquidity by Thursday? I wonder if there could be extreme movements. Yeah, quite possibly. We haven't had any for ages. I'll have to look for forex factory because I don't have news going forward. So we've got CAD CPI on Monday, 1:30. Claimant accounts. We've got PMI week next week as well. Non-farm unemployment rate on Tuesday. Weird. We got CPI coming out after unemployment. It's all screwed, isn't it? Yeah. So next week is we'll cover all this on Monday in the member stream on Monday morning. But it's a busy week next week. PMIs on the same. Look at that. Never had that before. We've got PMIs coming out on the same day as the unemployment rate. Talk about a recipe for an explosion. Jesus. We've got the pound rate next week as well. And the euro rate. They're not going to change, but the pound rate might. Euro won't. We've got CPI on the same day as that as well. Wow. And then the Bank of Japan rate, which is not forecast, but possibly forecast for a 0.25 increase. I think it probably will go up 0.25 personally. But so yeah, big explosive week. This is going to be a great week for news trading. If you want to learn how to news trade, advert, we've got a whole section on it in the MST Academy. Big one. It's one of those weeks where you could literally go in. This little tool here, I'll have this out today. This little tool here is one of those weeks where you can basically just go that, and basic. Oh, hello. Why did that not work? Didn't tick, that's why. And just basically take trades like that, because if that news is impacted and we get any surprises next week, anything is just going to explode. It's going to be one of those weeks where it just goes crazy. I've never seen, we haven't had that before because we've never had, non-farm payroll is always on a Friday. The unemployment rate is always on a Friday, isn't it? Because we get Wednesday, we get the ADP comes out, which came out on Tuesday this week. Yeah. And now they've moved it to weekly. So yeah, it's all screwed, isn't it? It's going to be a big one. Pound CPI as well. GDP for the New Zealand dollar. Talking about GDP, New Zealand dollar. If that GDP figure comes out, I mean, it's a negative 0.9. If that GDP figure comes out massively bullish, Aussie New Zealand through the floor. There's no Australian news next week. So interesting. If we look at weekly Swiss chart, weekly, I don't know. Don't do weekly. So we've had three weeks of weakness in the Swiss franc. Yeah, and we've got still a bullish week. It's bearish candle, but it's still a bullish week. Higher high, higher low. Rejection to the upside. Yeah, so it's a strong week for the Swiss. That's all it is. It's just a strong week for the Swiss. which is totally right, isn't it? Yeah. What does the market do? Moves in waves. What is a wave? Profit take, continuation. What is this? Push, pull. Could be an A-shaped recovery. Could be a pullback into propulsion. It's not particularly strong or, I mean, it's just price action, isn't it? This is like, holy crap, look at the strength in the Swiss franc. This is just normal, as far as I'm concerned. It's not doing anything unusual. It's just a leg. Push, pull, push, pull. Push, pull, push, pull, push. New Zealand dollar, US dollar, hoping for strength in the dollar. New Zealand dollar, US dollar, yeah. Yeah, hoping for strength in the dollar. So I presume you got in short here. Just in grind. There's a lot of this at the moment, a lot of grind. So you just look, depending how many positions you're in. Again, we covered all of this in the academy and the boot camp, but when do you do aggressive drawdown control? When do you start doing drawdown control? All that sort of stuff. We covered all of that. Depending how many trades you're in, if you're in from there, we've moved roughly 130. So 40, 80, 120. You're 3 ADR. So you're probably in 4 trades, maybe 5. We didn't get any reaction there. In fact, we had a propulsion move through it and a retest. So we're coming up into this monthly high, which is your 2-month high, and accumulation, break, retest, retest, retest. So this area here is where they started the second leg down sell. So that is potentially where at ADR today, if we can get there, if you want to and if you need to, that is where you start doing your aggressive drawdown control. But you're looking for it to push back down into here to get a break even on it. If you're evenly spaced, that is going to be roughly where your break-even point is. So when you get down into here, take that off, chop that off, chop half of that off, reduce the drawdown. Can't do anything while it's pushing. You have to wait. You have to be patient. This is why we're getting small. Pain meds kicking in, Franco. Oh, dear. Get well soon again. Gold on a rip? Yeah, will be. Why is gold on a rip? You should be able to answer this question now, Virginia. US dollar is weak. What is US dollar? What is gold? US dollar cross. Yeah. So when the US dollar is weak, this will go up. When the US dollar is strong, this will go down. At the moment, the US dollar is weak. Therefore, it is popping. Dollar's coming down. Dollar's not going anywhere. Dollar's not going anywhere. When you look at euro, US dollar, there you go. Actually, no, dollars at the moment, for a change, has got a little bit of strength in it. Look. Well, no, it hasn't. It's very neutral, actually, dollar. So some of these dollar pairs are going up, some of these dollar pairs are going down, which tells you the dollar's doing nothing. If you want to know what the dollar is actually doing, the euro US dollar is an inverse index of the dollar index. So if you have a broker that has the Dixie, the dollar index, DXY, this will be inverse. So if this is going up, the dollar is going down. If this is going down, the dollar is going up. This is going nowhere, which means what is happening to the dollar? It's doing nothing. So this move here is just pure gold speculation. So, which does happen, obviously. Gold is its own thing. I'll look at gold instead of silver. Gold is its own thing. So yeah, there's a lot of buying of gold. We had some news about gold. We just had French CPI come out. We had some news about gold this week about the Russian gold, because there's sanctions on the Russian gold at the moment. There's a lot of it, like a lot. They hold a very majority share in gold. They hold a lot of gold. There's the sanctions on at the moment where they cannot export that gold anywhere into Europe or America, but they can get it out to China. And Russia have just signed a new deal with China to export more gold. So it may be what you're seeing here. I can't find the news event now. It was from yesterday or the day before. I can't search on there. don't think I go back far enough on here. I'd need to scroll back miles, which it's not going to let me do, is it? I've got a feeling it was yesterday. Might not have been. No, it must have been the day before. Yeah, so basically that move that you're seeing there is supply. I mean, gold is basically a commodity. It's supply demand driven. So if Russia is chucking more gold out to China, yeah, there's less supply. If there's less supply and the demand is the same, the price goes up. It's very, very simple. So, which is why we've had this parabolic run on gold. You know, this is the largest move we've ever seen in history on gold. I can't believe they're going to do it, but they are looking like they're going to retest that high. This is almost turning into a stock index. It's nuts. So I don't trade gold because it kills me every time I try it. But what add-in is this? What add-in is this? I don't know what you mean. I don't know what I was looking at. Tell me what I was looking at when you're talking, because when I catch up with chat, I've usually gone past whatever subject it was. Ask again, but let me know what on earth I was talking about. Aussie dollar, US dollar, same as all the others. Parabolic, looking for a pullback. We need some weakness in the Australian dollar. Again, if you're in here, so if you're in, we just looked at the New Zealand dollar, US dollar. Yeah, New Zealand dollar, US dollar, Aussie dollar, US dollar are the same thing. So if I put these charts up next to each other, yeah, virtually the same thing. So trade one or the other, they are highly correlated. Both commodities markets against the US dollar, basically. It's the commodities. Commodities are Canadian, New Zealand, and Australia. They're the big mineral exports. And they do the same thing at the same time. So it's the same analysis, basically. We're waiting for a profit take leg on it. Be targeting monthlies, targeting that propulsion. If we get, and we get 2 non-farm payroll from October and November. Yeah. It's all changing. This news, they've screwed news, haven't they? They've just broken news with this shutdown. Putting back on the DAX. So another inside bar on the DAX. Indecision. Market has absolutely, besides of these wicks, there's just no directional bias at all today. So we've got a potential, we have now definitely got a bear move in. So we're pulling back into, depending on whether you're using session or normal moving averages, we're pulling back into the normal 20 MA. So potentially this is just a continuation long profit take. We've got the propulsion gap at the open, which is in play. So that would be your pullback into the 30 session moving average. So again, good spot for buyers if they want to scale back in. I think the US dollar news are coming more bearish next week. Yeah, they are cooked. I mean, overall, since like the beginning of time, all about strength. What were we talking about? Swiss charts. Yeah, so since the beginning of time, you can't, no, that's not. Just, yeah, the Swiss is obviously a trender, but the peg. The peg, I remember the peg. I was in the peg. Yeah, I mean, it goes, it's strong. It's strong because you always get, when you've got a country that is neutral, completely neutral in the financial markets like the Swiss, and this is why the Swiss don't join NATO and the Swiss don't join European Union, because they want to be neutral. So if you want somewhere when all hell breaks loose on the planet to be safe, that's where you go. And that is their unique selling point. They are a safe haven. But yeah, I mean, it's you want to be buying the Swiss more than selling the Swiss, always. But equally, you can't just buy the Swiss. You know, market moves up and down. It's the same as the yen. If you look at the yen, the Japanese yen has always been weak. Yeah, it's always been a buy, yen. Always buy against the yen, especially the Swiss. Yeah. They did an intervention to try and stop it, and it's failed. So, you know, these are the trenders. So when you're developing trend trading strategies, you pick the yen and the Swiss as your focal points. You always will do, because they are nice trenders. But if you look at it on a daily basis, it does the same as everything else. Yeah, 50% retracements, 100% retracements. It's just, it has these moves, these parabolic moves, which you're always going to get when things change. They're not the safest things to position trade, unfortunately. Okay, so we're back to the open now. No, we're not, sorry. Utter rubbish. We're back to the 10-minute or the 10-minute ORB high. That's your open. So potential for buyers to step in here. But equally, this could just be an exhaustion move to the upside. And we're just going to come back to the open and sit in rotation. It is Friday. What about silver? Could be a huge short. When you say things like that, it's like, yeah, it could be. Could be a huge short. Could be a long. There's a 50-50 chance. Look at gold, right? Look at where we are with silver right now. So you are about 4 days up, following a rally of about 5 days. If you look at gold, everyone was saying, wow, look at that. What a sell. What a sell. What a sell. What a sell. Oh my God, this is the seller. Look at this is the sell of the century. They've gone bankrupt 10 times trying to sell this. Yeah. Yeah. This could also be a great sell, but it could also be a parabolic move that is going to go on for another 2 months. Yeah, it's a great sell, but it was a great sell for a whole 2 months, month and a half, 6 weeks there. You were selling this and dying. This is why I do not trade commodities. Treat them like a stock index. Buy them only. Especially at the moment, metals are going through the roof. Absolutely going through the roof, as you can see. Not what I do, though. But yeah, if you want to short it. No, you never heart about Friday gold rush? No, never heard about Friday gold rush, no. Because I don't trade gold. Look at monthly RSI on silver. I don't have a monthly RSI. But this is not a forex pair, you know. Let me show you. See that? Yeah, you can. Right, so I can't. Let me scroll back. I haven't got any more data. So the last time we were up at this sort of level was there. Yeah. What did it do? Went sideways for 6 weeks before going on a parabolic run for 4 months. Is that a good sell? Because that's up there? No. Just a reading. The US dollar is literally in the floor, on the verge of bankruptcy. They've just shut their government down for weeks because they are so screwed they can't decide what to do with themselves. Yeah. Do you want to buy that at the moment? No. The commodities market has been rallying for 3 months because there is a huge supply-demand issue. Do you want to sell that? I don't know. I just, gold and silver, they're up at these massive highs. Yeah, and they are the sell of the century if they work. If they don't work, they will blow your account. You can't position trade them. And, you've all heard the terminology trying to catch a falling knife. You're trying to pop a helium balloon here. Shoot as much as you like. That thing's going up fast and you're going to find it very hard to hit that target. Same as when something coming down really fast. You can try in as many times as you like and catch the low of it. But this is why traders fail. If you try and buy the high and sell the low and try and time it, you will get it wrong. If you get in with a stop loss, give it another 3 days, try again. Give it another 3 days, try again. But don't keep trying because you'll die. But, this is accelerating. This to me, on a normal market, this is a climactic move. This is an acceleration. This is like I just said, there's no one left to sell. So we have to push further to get our orders filled. But the question is, why are they pushing further to get their orders filled? Because there's a supply-demand imbalance. So you're just going to keep doing that. I don't know. I'm not an expert in commodities. I don't trade commodities. And the reason I don't trade them is they don't conform to the way that I trade. So the RSI is what I use on a day-to-day basis to make money. But I don't do it in these markets because I've never found them successful. So I don't use them. So looking at this, to me, is irrelevant because it doesn't work. You need to find an indicator that is successful on commodities markets, on metals. Which I don't know. But it's reading, huge reading, 93. But it's the same. You go and look at Bitcoin and look at the RSI on Bitcoin. Utterly useless. Doesn't work in crypto either. Yeah, it's had. They've both had good, solid months. We've got a nice little pullback there, but this is the thing with the RSI. It'll do one or two things. It'll do that or it'll do that. But if that isn't enough to get you out of that, I don't know. Okay, so the bull's buying back up to 20. So we've got propulsion move to the downside. So if we break through there, this is potentially just a market structure long. US dollar CAD. Coming down to a nice support. So within ADR today, but again, US dollar. I'm long US dollar at the moment. I think I'm actually long US dollar CAD. Yeah. So I've got 4 longs on US dollar CAD at the moment. So yeah, waiting for a bounce basically. So my average. I just took the position trader EA off, didn't I? So my average is 150 ADR, these highs. So my average is there at the minute. So a test of the 2-month low or last month's low would be my initial. See how it goes when we get there. If there's enough money there, I'll take that. If there's not, I'll scale out of some and hope that we pull back a little bit on this, but there's plenty of room. The nice thing about trading the US dollar CAD is they kind of move together. So the only way really these two go out of sync is if you have something dramatically different on the US to the CAD. So if they suddenly come out with a massive CPI number and the CAD comes out with a massive drop in CPI, you'll get these big, strong moves. But they don't last particularly long most of the time because it wants to spend a lot of its time in accumulation because they are close trade partners. But again, that has changed, isn't it? Trump's changed the world order. Basically, he's changed how we all trade with each other. But, you'll find the US dollar CAD does this a lot. You have a fundamental shift for a bit, and then it will stop that fundamental shift. Yeah, 50% retracement is that propulsion gap there filled. 23 retracement is a push back into the low of that propulsion gap, which gives me an exit at break even roughly. 61.8 retracement is the previous propulsion move. So anywhere in here, really, I would see if we're going to continue to be weak and if there's enough strength in the Canadian dollar to keep rallying, then that is probably what we're going to do. We're going to come back down into these lows, which means I'll be scaled into sort of 8 positions or so by the time we get down there, which is fine. Be looking for aggressive drawdown control by the time I get down there, and the move is going to be beautiful when it comes. But still strong. So I'll be watching these lows. So I think I'll get another on this today. Where's my scaling point on this? Sort of where's the level? It's just shy of ADR, isn't it? 132. And that's 137.2. So there. So that is 50 pips. Half an ADR is 34. So 40, 50. So it's pretty much spot on. So if we get down to ADR today, that's going to be a test of support. Yeah. So I'll buy up my 5th. Average will move from here down into here, which means that I can get out on a retest of that propulsion move there before that monthly. And I'd be looking, let's say, for example, that does move down to ADR today. Whoop, wrong line. That moves down to ADR today and comes and tests this level. Your 38 retracement suddenly kicks in exactly at that high of the week, this week. Which gets me out and in a profit, but I wouldn't take the profit. I'd probably take a partial. But we'll see where it goes. There's no news catalyst today. So today's either going to be just an exhaustion move. The thing you've got to think about, we've just hit 175% of the monthly range on silver. That's 175 of the AMR just gone in there. One. What's it saying? Can't remember what I was saying. Mine's gone blank. But yeah, so sorry, that's the other thing I was going to say. This week, Friday, we've got 2 weeks till Christmas now. We've got less than 2 weeks to Christmas. Scary, but we have. So think about, obviously, monthly, quarterly cycles. So the market moves in monthly and quarterly cycles. Yeah. So monthly, quarterly. What we're going to be doing potentially this week and today, which is potentially why we've had all this strength movement coming in, is we're going back to closing out our quarterly books and closing out our annual books as well. So don't forget, it's end of year. It's also end of quarter. It's also end of month. So it's a triple witching for as far as commissions are concerned within banks and institutions. So you're going to want to hit targets this week, because if you are taking next week and the week after off, obviously, as you will do over Christmas, and you usually most bankers tend to take a 3-week break over Christmas, it starts Monday. So this could be the exhaustion move coming in today. which is the close. And that's it. And then all we're going to do now for the next 2 to 3 weeks is that. So these moves that we've seen going in could be just the start of accumulations, which is why I'd love to get as flat as I can on all of this stuff as fast as I can, because holding this is just going to cost money in swaps. So, okay, so the 20 MA session, moving average and propulsion has just been tested. So there's your propulsion gap. So they've just retested propulsion, which is getting bought back up again. We've got a minute left on this candle, which you can't see because it's behind my head. But there's a minute left on the candle. So if this next candle here is a bull, and we sort of break that high there, I would say that is your market structure pullback, and we're going to continue for a new leg up. This is where the buyers need to get through that propulsion gap. I haven't got the SRP indicator on here, have I? I should really put that on. Just so I can see the propulsion gaps. That. So this is where sellers are selling from. This is where the buyers are buying from. So this is your battleground. So if we break through there, likely we're going to put a new leg up. If we break through there, we're going to test the open, and likely we'll go into a range. Right, anybody got anything else they want to look at today? So ORB still long. We're obviously waiting for that move to the upside. Or we're going to stop out. And potentially downside target today, if we break short, as you can see, which I've got in play, I've got a short ready, is a move down into the previous close. If we break short. So we had a gap from the, that's your previous close of the DAX. So ignore. So yeah, so just so, I mean, obviously everybody I'm sure is aware, market closes at 4:30. It doesn't, this is all price action caused by the broker. And so is this. So these lines that you see plotted on the chart, that's the actual open and the actual close of the DAX exchange. So this is the actual official closing price. So that is what we will likely come down and test if we break short. And then obviously it will be a case of whether we're closing down or not. If we break to the upside, obviously the sky is the limit because we have no upside resistance at the moment. So the only upside resistance we have on the DAX is this monthly level, which is where my target is. So that is potentially your upside target, which is this propulsion move to the downside, which we retested. So that's why I'll be looking for some sellers to step in. Whether or not there's enough sellers to drive it away is irrelevant. What's going to happen is we're going to hit it and we're going to bounce. So I'm getting out on the bounce. RSI is also extended as well. So we'll be ready for a pullback on this leg. But as you can see, we are totally sideways on the DAX. The DAX is in complete range. So range highs. We'll be watching all these highs. Yeah, this area here, we've resold it over and over and over again. Get out your longs there because probability is it's not going to get through. And if it does get through, you're looking at moving up to 225 ADR next week. And then you're likely going to sell it again. It's not going anywhere. We are stuck. Okay, I'm going to add a second long. That's a limit order, wasn't it? That's stupid. Never mind. Hopefully it will trigger. I've got 1 minute left on this candle. I'm just going to delete that limit order. I'm just going to go with the market order. Just a one-to-one market order. Just adding more size in, basically. Going to move my stop up as well. Reduce a little bit of risk on that one. Can't see now. But yeah, so roughly 250-ish, 260 upside, 170 downside. See where we're going. We're either putting in a new leg high or those sellers are going to add shorts. And if they're going to add shorts, we're going range. So I just want to be out. If we're in a range. Sorry, you missed some of the stream. Have you covered silver? Yes. The Hang Seng Index? No. Euro odd? I am long with one position. Euro odd. Oh, God. Stop doing that. Euro odd. Long one position. Closed yesterday 4 positions with profit. Didn't open a new position so far because it looks a little that we break into H4 to the downside. Euro odd, I am long with one position at 177,680. From here. I closed yesterday 4 positions with profit. Didn't open a new position so far because it looks a little that we're going to break to the H4 downside. Okay, I don't understand what you're talking about there. Why did you leave one position open? So you got out yesterday, so you scaled in. No, first position of 5. Okay. Right. I wouldn't have done that. So if you got in here and you've scaled in, let's say like that, right? When you got here, what you should have done was close that out, and that out. Or 75% of that. Yeah, because what you've got now is a problem. Yeah, so you are now in long with your average price up there. If you'd have got out of that, and even that, for example, what you would have is an average price here. So if you close those 3 out, left that one on and that one on, at least your average is there. So you've got an exit at 125 ADR. At the moment, you've got an exit at 200 ADR, which is very hard to achieve. So when you're doing drawdown control, what you've done basically is drawdown control. But all you've done is you've closed out 4 positions in profit. So all you're doing is you're taking the profit and ignoring the loss. You can't do that. Your job as a position trader is to work the loss, work the problem. Yeah. So if you look at the dashboard tells you where your problems are. Yeah, work those. So if you close profit on anything, so if I close out all this lot here, which I wouldn't do, but if I close out that, what have I got? 40, 20, 22, 25, 35, 45, 55, 58. So I've got about $58 in profit I can close out right now. So I need to focus on what is not working. These are your oldest positions over here. So you need to start working on those positions. I can't do it here because obviously I haven't got enough profit. If I'd have had 4 trades in profit, I'd be able to work these, but I can't. But you want to work on these. So if you use, close out 50% or 25% of that, or close out 50% of that, you've got to use that profit. If you're doing drawdown control, if you've got 5 trades on and you're doing drawdown control, yeah. So if it moves up to here, you close that out in profit, you close that out in profit, you leave that, yeah, and you close out these. You try and work these, you take a percentage of those off, but you leave something in place so that you've got an average price which is close to price. What you've done is moved that, which means your average is miles away. So what you've got to do is take another trade, which will bring your average down to get out. But what if it now continues to drop? This thing is just going to be almost impossible to get rid of because it's going to get bigger and bigger and bigger, the drawdown on it. That's what I would have done. But equally, if right now you've got an option, so your trade's up here, if you've closed all this out yesterday and it's pulled back, why are you not getting in long? If you've got a signal to go long, go long. Hasn't given you a signal yet, but when you do get a signal, why is my moving average not showing on that either? Moving average off for some reason. Oh, you just had a signal long on the 9 EMA on the 5-minute chart. I'd take another trade now. Because if this is a pullback, got a market structure break, you're testing propulsion, you've had a reversal alert to the upside. So if you get in now with your old first trade here, whatever that was, take that plus 1.2 or whatever it is your multiplier is if you're using a multiplier, you're going to bring your average down into this propulsion gap. So when we retest that propulsion gap, you can exit the whole lot, completely break even. So you've banked all the profit on that and you get out the rest of it at break even, done. And that will be a 38 retracement, potentially on a short leg. You've got to try and give yourself that exit. The whole purpose of position trading is we want our average price of our entire position to be here within ADR, because price moves within ADR 58% of the time. So we have a 58% probability of an exit at any point when the market pushes in our direction. If you scale out of a position in a way that gives you a 200 ADR average, you've got to rely on price pushing for 2 to 3 days in your direction to exit the position for you, which is obviously harder because it's going against you. So it's just a harder exit. But that's an entry now. We just literally, if you want to wait for the reversal alert, the reversal alert's not going to happen until we get back up into there. But your moving average signal has just gone in. And you've got a 4-bar reversal there. We talk about 3-bar reversals, but that's a pretty damn good example, right? So what is this? Blue line, monthly support. This is a propulsion gap. We have come down and we have tested monthly, down, pause, pause, push with propulsion. Previous monthly, you got double monthly there as well. Look, we've just broken back above a double monthly support resistance. Looks like long to me. We slammed through it, tried to get above it, couldn't, broke down. We've broken above that level, pushed down, buyers bought more, pushed down, buyers here. Yeah, anybody buying this support is buying it here. That is what I reckon we're going to get. But equally, it could come down and retest that low. Go into an accumulation. But equally, if you buy now and that doesn't work out, you can buy again there. What are you, right? Think about, so I'm just going into a mission on this one, but it's a really good example. What you do here, you get in, it moves up, you get out, right? When this moves down again, entering another trade here is doing nothing for you but making your position better. It's getting you in, and if the 50-50 probability of that happens, you're out. If the 50-50 probability of that happens, your average is closer than it was before. If it moves down into these lows, you buy it again, you move your average down. You're making yourself better and having more probability of exiting that by entering now and entering again later here, because your average will be there, and an exit will be available on that double top if this goes into accumulation. Yeah, visualize where price is going. It is either retracing that leg, or continuing that leg, or going into an accumulation. There are three things that can happen, nothing more. There are three things that can happen with every single symbol. Yeah, it's either going to be pulling back on a leg, it's going to be reversing a leg, or it's going to be doing nothing. What your job is to get out of that trade that's in trouble. To get out of that trade in trouble, you need to bring the price down. If your price comes down and this goes into an accumulation like this, by adding here, you bring the price down to here, which means you exit on the next leg up in that range. Out, done. Leaving it there on its own is going to do nothing. But potentially cost you swaps for the entire 2-week Christmas period because the thing just goes like that. But we don't know what it's going to do we? If we knew that, we'd do it. DAX is going to stop out. I had rubbish today, innit? So the sellers did step back in. However, we might hold this low. Yes, I have done that. The first position is 50% of the original. That's cool. I'm not sure at the moment to set a new long position. 100% size. So if you with sizing, right, so what you've done basically is if you've reduced this initial size down by 50%, let's say for example it was a 0.05 and now it is a 0.03, say, what I would do here is take whatever multiplier of that. Yeah, so this is your first trade in effect, isn't it now? So just get in, because your job is not to get in with large size that might go against you, oversizing. Your job is to deal with the size that you've got on. If you've got a 0.03 on and you're using a 1.2 multiplier, take a 0.04 here. Yeah? We're just looking to average. Don't forget what you've got. You work on that trade. That is what you have on. Whatever size that is, this is the same size, or it's a slight multiplication of that size. Yeah, so use whatever's here. So if I'm getting in, let's say for example I get in with just for simplicity's sake, I get in with a 0.1, a 0.12, a 0.14, a 0.17, right? And it pushes up. I close out a 0.17. I reduce the 0.12 to a 0.08. I reduce the 0.1 to a 0.06. Yeah, and that 0.14, I reduce it down to a 0.1. Okay. If the market pushes down again and I take another position, it's based on that. Yeah. So the last trade I took was a 0.01. So I need to take a 0.12. Yeah. So you can see what I've done. I've taken one, so 10, 22, 36, 40, 40, 53. But I've reduced all that down to 24. So I don't want to get in with a 0.17 again, or a multiple of what 0.17 was at that point. I get in with a multiple of what that was, what that is right now, because I'm controlling this lot sizing. Always make sure you're scaling back in. This is what the EA does. The EA will scale in based on the last lot size that is available. How does the dashboard close partial open positions 25.50? Does it close the least profitable first? It closes whatever you click. Yeah, so if I click that, it will close 50% of that. If I click that, it will close 50% of that. Each of these is each order, isn't it? Look, so this is one order, this is one order. So that button closes 50% of that. That button closes 25% of that. That button closes all of that. Use the partial. Yeah, so you've hit the nail on the head there. I used a partial close facility for the first time the other day. I should have paid more attention. Read the manual. It's fully explained what everything does. Thank you very much. That break of this 2 months lows to the downside was what made me insecure, especially with the room to the downside in H4. I don't know which way it's going. Yeah, I trade what I see. Yeah, so this is broken down through monthly levels, which means one of two things. It is either going to continue to break down, or they are buying this area up, and we are going to do a measured move on this market structure back up into here to continue down. Yeah, I don't know what it's going to do, and it doesn't matter what I think. And this is the big thing that you need to understand. You don't know what the market's going to do. You can't control the market. So what you think is totally irrelevant. What you need to do is focus on what you have. You have a long position here. Yeah. You have to get out of that position. So to get out of that position, you need to bring price down. So what do you need to do? You need to get in long. Whether or not you think it's going up or down is irrelevant, because what you think has got nothing to do with what the market's going to do. The best analysts in the world, paid 6 figures a year, get this wrong constantly, because this is basically supply and demand through 10 institutional banks. Yeah. If they all decide to go short one day, the analyst who thinks the market's going up is wrong. You are wrong. I am wrong. It doesn't matter what you think. The probabilities are 50-50. The fact is, you have an order here which you need to get out of. The only way you're going to get out of that is either this moves up 200 ADR, or you take a second position, average into there, and you move up 100 ADR. Which is the best? Moving up 100 ADR, 58% probability. Moving up 200% ADR, 3% probability. I would take another trade and get my price down in case it does go up. If it goes down, I'm then scaling in and bringing price closer to my entry. And that's what I need to do. I need to keep control of where my average price is in relation to current price. That's your job. Yeah. Doesn't matter what price is going to do. You know, you don't learn this. It just is a fact. But over years of trading, you will see 1 billion people in 1 billion forums and 1 billion people selling 1 billion courses, all claiming to predict they know how to read price action and which way the market's going. They don't, because banks don't know, because there's 10 banks, and it doesn't matter if I'm HSBC today with 500 million to go long. If Citibank and Barclays have got 2 billion to go short, I'm wrong. Yeah. So the guy in HSBC paid 6 figures a year to analyze the market and says they should be buying the euro against the Australian dollar. If the other banks disagree, it's coming down. What makes you think you know which way it's going? Bloody clue. No one has. If we knew that, we'd do it. Why is nobody a billionaire in this industry? Because we don't know. You can't predict the future. This will go up, it will go down, and it will move through time. Those are the constants. Your constant at the moment is you've got a price up there and you need to get back to it. So if you can't get back there, move it down. That's all you can do. And you sit there and you wait. And one of two things is going to happen. It's either going to, down here, break back above and continue back up and do a profit take leg down there like that, or it's not. If it does, you're out. If it doesn't, you're going to scale in and get out later. Time. We buy time. This is what position trading does. It buys you time and it stops you being accurate. You cannot time the market. And this is what every system and every strategy on the planet is trying to do. It's trying to predict where to get in and out. You can't, because it's different every time. Everybody that wanted to sell that double top missed it because it was 5 ticks lower than the double top, so they missed the move. Oh well, everybody that sold the double top the next time it came back got stopped out. And then they got in again and got stopped out again. And then they flipped long because they thought it had broken out and they got stopped out again. Why? Because they're trying to time the market. You can't time the market because you don't control it. It's not a clock. Banks and institutions decide whether this is bullish or bearish, and there's a 50% probability of one of those two things happening. That's all you have. Yeah. So, don't worry about it. Don't analyze it. This is where the position trader EA is brilliant, because the position trader EA takes all of this out of your equation. If you're in long, right, it will get you in and get you out. If you think it's wrong, you can turn it off, but it knows how to get in and get out. So I would leave it doing it. I don't take any of these trades. They're all taken for me because I know the formula and I know the strategy I want to execute. And that's what it does. It executes a strategy. It's dumb, it's stupid, and it just takes trades. But it does it in a way that makes me safe within that move. So on the Dow Jones at the moment, what I need is for price to move 150% of the average daily range in my direction. Yeah. At the moment, there's a 77% chance of that not happening. But as a new trade gets taken, it increases my probabilities. So what I need now is for price to come back down and retest this double top to get me out. And that's a 50% retracement on that leg. The reason I have an entry there as an average is because the EA has mathematically scaled me in, knowing that if a 50% retracement happens, which it does all the time, pretty much, just what it does, isn't it? It just retraces 50% all the time. I've got an exit. I don't have to make money, but I don't lose money. If you don't take the trades, you won't have the exit. So when it happens, you won't have an exit and you'll be stuck. And this is a really nice looking extension at the moment, but there's a probability of that happening. This is the problem I've got with the new version of the EA. I can't decide on an instrument by instrument basis whether I want to go long or short. And I would much rather be obviously long on indices, but I need to figure out a way. What I need is an input, don't I? I need a long only input or a short only input field. And if I put symbols in there, it won't take shorts or longs. I've just fixed my problem. Okay, I'll fix that. Okay, 20-minute accumulation. So I've stopped out on one of those trades. Second one running. Decent risk reward if it works. Silver's starting to sell off, is it? Might be. Reversal alert on the 5-minute. You got 17 minutes left on this candle. In 17 minutes, it could look like that. Depends which time frame you're trading, doesn't it? I mean, if you're trading low time frames, you're in on the 5-minute. 15-minute, you're basically still inside that candle range, and they are buying it back up again. This is why your time frame is so important. Yeah. On a 30-minute time frame, there's absolutely no sell signal there whatsoever. We have got an inside bar. That's indecision. That doesn't mean sell. It means I don't know which way I'm going. So you have a 50-50 probability. On a 5-minute time frame, you've had a structure break to the downside, which is we've had 10 minutes of solid selling. The bears have taken back control. And the bulls just tried to push up again and got rejected back. So they've retested that break and they are fully in control, aren't they? On an hourly chart, we are looking potentially within the next 17 minutes like we might have some selling price action coming in. But that's not a reason to sell it, is it? You'll probably sell it below the low of that candle if it breaks, because all you're doing at the moment is you're creating a propulsion gap, which is a strong buy. On a 4-hour chart, you're miles away from a sell. Fully bullish in a propulsion gap going for the monthly high. So anybody looking at a 4-hour chart now is adding. Anybody looking at an hourly chart is thinking, I might have a sell in the next hour. Anybody on a 30-minute chart is going, okay, I'm going to wait 30 minutes and see if we are actually bearish. On a 15-minute chart, you're saying the same thing. On a 5-minute chart, you're short. Where's it going? Why is trading difficult? Because we invented all these time frames that everybody analyzes, and every single one tells you to do something different. Pick one, stick on it. But yeah, it is selling off for 10 minutes. This has been selling off for an hour. We're still not going anywhere, are we? Buyers are holding. Sellers think they're in control, but the buyers also think they're in control. Symmetrical triangle, contraction, indecision. No one's in control. We're in a range at the moment. It's a bullish range, I would say. So I'll be more interested in buys than sells, but not really that interested in anything. Just 2 losses at the moment this morning. Right, that's it. I'm done. So it's 9:45. I'm back this afternoon at 2 o'clock for members stream. This afternoon, we are just going to do a full analysis of the week. We'll have a look through all the FX pairs. Where am I? Live calendar. So 2 o'clock this afternoon, not 2:30. So we're going to spend half an hour basically just having a look at the position trading account. We'll go through all the FX pairs. We'll have a look at next week's news in detail, a little bit more detail. And we'll look this afternoon about how to get out of any trades that you're in. So I always try and cut down my exposure over the holiday period because it tends to be stuck basically for a couple of weeks. So all you end up doing is paying swaps. So it's trying to get as flat as we can with what we've got. But I mean, at the end of the day, you can only do what you can do with what positions you're in. We'll obviously trade the NASDAQ, gold and the Dow at 2:30, and then basically any other questions really. So it's just this afternoon Q&A session. We haven't got any. So there's no Q&As this afternoon. So any questions you've got, anything you want to cover, feel free. Today, I'm going to try and get this up onto the marketplace. I need to get the manual written for it. And I need to do screenshots. I need to kind of do a little video. So what's the time? 10, 11, 12, 1, 2. I've got 4 hours to try and get that sorted on the marketplace. Then I'm going to convert it into MT5 probably next week. So I will let you know. I'll put a post out in Discord, on Facebook and everywhere about this. I'll do a quick video just to explain what it does basically. And then, if you want that, it's a fantastic little scalping tool basically. It's kind of like the position trade, the price action toolkit, but it's just better in my opinion. It's simpler. I've just got everything I need. But if there's other stuff you want on it as well, let me know because I can expand the functionality, but obviously I don't want to make it the biggest, most complex thing in the world at the end of the day either. So, but yeah, I'll try and get that done today. I've got this indicator as well, which the guy that I built this for, it's finished. So I might cover this again in the members stream this afternoon. We might do some price action reading this afternoon while the US markets are open, if they move. And I'll just talk through what this indicator does. Basically, it's all based on Al Brooks's stuff at the end of the day. So it's his kind of candle counting system, but really all it is an indicator that draws in highs and lows, and it counts candles. That's all it does. So it's obviously got all the statistics as well for you on bull bars, bear bars, inside bars, session bars, all that sort of stuff. So I might put this up on the marketplace as an option as well if people want it, but it's not really going to be any use to you unless you're really trading Al Brooks's stuff, because that's what this is all about. So if you do trade Al Brooks's stuff, obviously it's probably quite useful, but there's probably other indicators out there that do it, but I built this for him because he wanted specifically the features and functionality in here to work in the way that this works. So, and he said, no problem if I want to sell it. So, I might actually put it out there for free. I don't know. I think it's got very limited use. Literally, if you don't know who Al Brooks is, this is absolutely no use to you whatsoever. So there you go. How does the profit and loss module close partial entries? Least profitable first. You've literally asked that question and I've already answered it. Profit loss module. Close partial entries. Do you mean in this? Are you talking about this? You're not talking about the portfolio dash. What are you talking about? Which thing? This. So how does the profit and loss module close partial entries? So it closes 50% of the trades that are open. Yeah. So if I hit partial now, it will close 50% of that trade. If I had 2 trades on, it would close 50% of both trades. So you're closing 50% of your position. So if you are building a position with multiple trades in, it will close 50% of them. Yeah. If you just want to close the most profitable trade, there is a close MP button. So if I want to buy again there. I just put a wide stop on it just so it takes a tiny little size. But if I execute that now, yeah, got 2 trades on. Now, I can now close the most profitable. So that will close out this one that is in profit and not that one. So that will just close the profitable trade. So the idea of when you're scaling in, this is what most people do, and this is why this works this way. So if I get in to 3 trades, yeah. So price, let's say, for example, here, yeah, we pushed and I went long here. We went down, we rejected and pushed up, and I took a second long. We pushed up, pulled back, and I took a third long there. So let's say I've got 3 trades on, yeah. Once this is pushed up here, most people will want to then take a partial on their trade. Now, their trade is all the trades. It's the position. You are long on the DAX. So I want to close out 50% or whatever I put in there of that. Oops. So I want to close out 25% or 75%, whatever. So you take a partial. Or I might want to close out my most profitable trade. And what that will do is it will just close out this one. Yeah, that's the most profitable. So this one will have like $75, that'll have $60, and that one will have like $20 profit. It'll close out the most profitable. Break-even average will move to the average price and put a break-even there for you. Yeah, so it just closes either most profitable or it takes a partial on everything open. Yeah, I'm going to take part of my profit. My profit is the combined total of the 3 positions. In this case, negative 6.16 or plus 1.2 now. So if I close 75% of that, I'm taking 75% of the total profit. It doesn't do it on individuals. So again, that's just adding complexity. Most people, most traders take one trade, have a stop and TP. More advanced traders scale in. So when their trade is working, they will buy a pullback and add more size to their trade. Or they will buy a breakout to add more size to their trade. So they scale in and add to their winning trades. Or if they're building a position, they may DCA into a position with small lot size, in which case then they will still want to take partials by closing the most profitable out and then moving break even to the rest, or they will take a partial on their entire position and move break even to for the rest. Yeah, so that's why it does it that way. But if you want it to work a different way, it can work a different way. But this is the problem I have with development, is I build something to do it the way that I do it, and then someone else says I want it to do it a different way. Now that person is usually the one out of 100 people who do it that way, And I can't just build every possible way of doing everything into one thing. You can, but it becomes incredibly complex. And then what tends to happen is you have a billion inputs, and then people go, oh, I can't be bothered with it. I don't understand it. So I want to try and make it as simple as possible. If you want to buy at a market price, it will do that for you. If you want to place a pending order, it will do that for you as well. And you can then execute or cancel that. You can move to break even or your average break even. You can take a partial on your trades. You can close all your trades, or you can close just the one that's got the most profit on it. That, in a nutshell, is what 99.9% of people that trade low time frame charts do. So that's what I built that to do. And obviously, some people you want to be able to adjust your risk. You want to move into percentages. So if you want to use a percentage risk instead, you can use percentages. Apart from that, pretty much it. I can't really see much more that you'd want in it, but if there is, I want to close 50% of the least profitable first. See, no one else on the planet does that. Why? If I went long at 50, then at 40, then at 30, then at 20, I sell half. I want to close the 50 and 40, leave the most profitable running. Yeah, do it manually. Basically, just do that, right? So double click on your order. Yeah. Modify it. Market execution. Half. What I just did there. Anyway, that's what you do. It doesn't do that because this is not what this is for. This is for scalping. It's not for position trading. You're doing some weird position trading thing. Close 50% of the least profitable. Today. No, it doesn't do that. Did I just add a sell on there? I can't remember what I don't know what I just did there. Let me just remove the... But I don't quite understand what you're doing. So, I mean, I could probably make it do it. Buy, stop loss. On the short. I just added a sell stop, didn't I, down there? I don't know what I did. I don't know what I did then, but I modified something. I don't think it actually executed the order. But yeah, it can do. But, you know, like I say, the more complex I make it, the more, like I said, I've never heard of what you're trying to do, but what you're trying to do is probably what 1 out of 5, 15, 20, 30, 50, 100 people want to do. When you're building stuff like this, you've got to kind of build it for the masses and what the masses do. And the masses basically want to buy and sell, and they want their stop loss calculated for them. They either want to enter a market order or a pending order, and they want to use a risk. That's it. That's what it does. It does the simple stuff. I can build you a version, maybe, that if you wanted a specific version. DAX long looks good. Well, I don't know. We'll see. I'm just going to... That extra long I took, I'm not too worried about it. It's only $40, but I'm not convinced about the long. I'm not convinced about the short at the moment, to be honest. It's just going nowhere, is it? So we've got 5, 10, 15, 20, 25, 30, 35 minutes. We're going nowhere. So we're resetting probability, basically. The sellers are defending this propulsion move. The buyers are defending this propulsion move. Right now, this could go either way. We are sitting on the MA. Bullish, but that is it. Just because we're sitting above a moving average doesn't mean we're going long. It means we are at the average price, which means that the probabilities are 50-50. We're trading at the average. Not bullish or bearish, is it really? It's just what it is, which is nothing. Not looking good for my balls at the moment, is it? It's scalping, adding to a position at increasingly better prices. Yeah, so you're basically scaling in your dollar cost averaging, aren't you? I want the least profitable to go first. If I sell, say, 50%. All desktop platforms do this. I don't know of any that do that. I mean, I don't... if then it hits average or just above, I want the least profitable to go first. But you're not banking any profit. What's the point in that? All you're doing is you're taking losses off. I don't understand. Show me your strategy. Send me your strategy on Discord or something. Explain the edge. Explain how taking a 50% loss every time it gets to your average price makes you money. It changes your average price, but it doesn't make you money. So if you scaled in, what you're saying is you scale into a trade, yeah. When it moves back to your average price, you close 50% of that out in loss. You want to close 50% of that in loss. And then if price moves down and pushes up again, you close 50% of that in loss. And then it moves down. So if you're constantly buying against the trend and it constantly trends all day, like yesterday, 200% ADR on the DAX, what you're going to do is hemorrhage 50% of your account. That doesn't make sense. I'm either completely misunderstanding what you're doing, apart from hoping it goes back up. But I get that in position trading, but it's absolutely fine. But on 5-minute charts, this could go down for 3 days. If you're scaling into a position that you're actually catching the high on and you're going, you'll be blown up within no time at all. What you're better off doing is using the automatic drawdown control function in here, yeah? So if you basically set this to same symbol only, and then when you get a pair that gets to a combined profit of, say, 0.5%, find a loss that has 0.25%, yeah, and close out 50% of the losing trade. What that will do is it will automatically close out 50% of your losses for you. The trade portfolio dashboard does all of that functionality. So you might find it better to use this rather than using this new tool, because this does all of that. If I understand what you're talking about properly, but I might not. I don't quite get it. It does sound like a recipe for taking loss after loss to me. If it goes up, obviously I get it. You'll be able to recoup those losses nice and quickly. But if it doesn't, you won't. I don't know. Right. Anyway, message me if you want to, and I'll have a look at it. I'll have a look at what you're doing. Send me some examples of what you're doing and how you're doing it. And I'll see how easy it is to build into there. In theory, I could create a button called, I could create another section under here, which is called partial most loss or something, and 50%. And basically when you press that button, it will find your biggest loss and close 50% of your biggest loss. That's, I think, what you're trying to do, isn't it? So yeah, I mean, it's a button press at the end of the day. But I mean, I've never heard of that. Therefore, if I put those buttons in there, everyone's going to go, what's this do? Why does it do that? And before you know it, you've got to explain complete strategies that you don't trade to people because you've got buttons in there. Leaving the final 50% running at the best average. Everyone I know does that. But you don't reduce until it hits the average and then you run the balance. Everyone you know does that. I've been trading 20 years. You're the first person I've come across in 20 years, and I've been everywhere, that does that. I've never heard of it. But if everyone's doing it, message me. I'm all ears, because I've obviously been doing it wrong for 20 years. I'm happy to have a look at it. I get it. I get what you're saying. But what I'm telling you is, if you'd have done that on the DAX yesterday, you lost a ton of money trying to do that. Trying. Because it didn't give you an option. It didn't give you a way to do that yesterday. you get it wrong on an ADR day, that strategy will hemorrhage cash. So show me what it does on an ADR day when you're the wrong way. And don't tell me you get in the right way every day, because you don't. No one does. If that was the case, we'd all be billionaires, wouldn't we? But yeah, let me know. I'll have a look at it, and I'll see. If I basically when I develop stuff, if someone comes up with a logical reason for something that works, I will happily do it. But what I get all the time is people saying, I've got this great strategy, right? When my price moves outside the Bollinger Band, we sell it and we try to get back to the moving average. No, it doesn't work. How do you know it doesn't work? Because I've done it thousands of times. I've modeled it. I've tested it. It doesn't work. All right, I'll get someone else to do it. Fine, off you go. Yeah, that's what I get most of the time, because don't forget, I've been around a long time. I've done it all. And I know most of it doesn't work. But I've never heard of that. I don't think, if I understand it right. And the reason I don't think I've ever heard of it is because I know what would happen if it went wrong. What you're doing is you're basically just scaling in. It's DCA, which is fine. There's nothing wrong with dollar cost averaging at all. You were trained that way, but you were in my course. You were new. Cannot keep adding, there has to be a cutoff point. Normally a percentage of your account. Yeah, so what you're saying is I'll keep selling it and getting it wrong until I blow my account by a percentage. That's not good. I think what you need, right, don't take this the wrong way, but what you need is someone to build an EA to model what you're doing long term, right? I had somebody come to me a couple of days ago. I'm going on waffles today. It's Friday. With a strategy which they'd shown me back testing of, and a beautiful equity curve. And I looked at it, I was like, that looks fantastic. Explain the strategy to me. They explained the strategy to me, and I was like, that doesn't make sense. And then they showed me what they did was they showed me an equity curve, which went like that, right? And it was like, that's good. It takes losses. It has stagnation. It has lovely big run-ups and stagnations. And yeah, I like it, right? They showed me the equity curve. They didn't show me the time period. They tested it over 5 weeks, live trading. And that was their equity curve, live equity curve, which is what got me interested, because it was a live equity curve. But they didn't tell me it was 5 weeks of trading. Yeah. Build an EA and test it for 6 months. Yeah. You've not found the Achilles heel in that, I don't think, yet. So if we build an EA for that strategy, need entry criteria, exit criteria, etc. In fact, if you're doing what you're doing, it shouldn't matter what the entry criteria is too much, because it's DCAing. It doesn't matter how accurate you are, does it? We could build an EA and test it, but I think what you'll find is you will get to a point where it will just do that, and it will blow at some point, because you will hit a run where the market conditions are wrong for that scaling strategy. Same as martingale. Martingale works beautifully 90% of the time. The 10% it doesn't work, it destroys your account. There's always a way of stopping that drawdown by closing out a large loss, but the large loss will 90% of the time wipe out the winning streak, which is why they become break-even strategies. But if you've been trained that way, you've obviously done another course, I'm all ears. I'm always open to what people have been doing, and I'll look at it. Maybe something that I've not come across, which is fine. I'm always happy to investigate new stuff. The way I do stuff is the way I do stuff. There's a billion ways to make money. It's just, if I can't automate and backtest it and come out with a profitable equity curve, I'm not interested, because it's all about backtesting, as you know, because you were in my course, weren't you? Yeah, you did it. You did everything. You did. This is the most important part, which I've put up this week, I think, anyway. This strategy development backtesting part. This is, if it doesn't work here, it doesn't go live. That's it. If you do this and it fails, you go. So as long as you've backtested it and you've got it automated, that's fine. Waiting for a level to go short or long, normally at extreme, but cannot know if it will just keep going. The idea is you can be wrong on your first few entries. Yeah, that's position. Basically, what you're doing is position trading, which is what I taught you to do, isn't it? But you're doing it on this time frame. It doesn't work on this time frame. use the position trader EA, right? Yeah, you can't do it, but this here does what you want, the trade portfolio dashboard. Go and test the position trader EA on the 5-minute chart, right? And scale in on RSI. It doesn't matter how you get in. If you use a level, which is a high, a daily high, a weekly high, previous resistance, a monthly high, a pivot point, whatever that level is that you choose is irrelevant, because it will either do that or that, right? So you can use the RSI, you can use ADR. Those things can be tested in the position trader EA. Do that on a 5-minute chart. If you are scaling in more than twice intraday, there has never been a test I've run that hasn't blown the account at some point or taken a loss of X%. And the X% loss is always going to outweigh the profit, because what you're doing is you're scaling in against the trend and you have to get out usually intraday or after 2 days. One of the reasons I introduced the time-based exit was because of this exact thing that you're talking about. We tested time-based exits, and time-based exits were the best way to exit rather than a percentage loss. But the equity curve was one of those that ends up roughly back at zero. So it doesn't lose money, but long-term edge, it doesn't make money, because what you will find is, especially with stock indices, when it does that, you're fine. When it does that, you're not. And these days, in stock indices specifically, outweigh those days. And these are the days it makes money. It's like the stock index hedge strategy that I have, the EA. Stock index hedge works amazingly well in rotational markets. It will just print money. When it goes into parabolic markets, you have to babysit it, because in parabolic markets, it doesn't work. And that sort of thing that you're describing is a parabolic. Its Achilles heel is going to be a parabolic move, like yesterday. Yesterday's a great example. You probably would have sold yesterday's high. Close out 50%. What happens today? Shit. We're still in it. You're still in it right now. You know what I mean? You're still in it. And if this thing now goes 100 ADR after the 200 ADR day, because we're going into a parabolic expansion, that will just kill you. You die. You just literally will hemorrhage cash. Or you'll get to a point, like you say, where you get to 3% loss and you just go cut. Okay. But you will have wiped out the 3% that you've made over the last 3 to 4 days of accumulations. Doesn't work long term. It works on higher time frames because we're trading bank and institutional movement. On low time frames, you are trading price action, and price action doesn't work in that way. You have to. I've never found an intraday strategy that that doesn't either use hedging or a stop loss that works intraday. Everything that you try and do with DCAing intraday is always failed. Always failed. But I'm always open, send me a message. It's discretionary scalping. Well, if it's discretionary, you can't automate it. So if it's discretionary, you can't be taught it. So whatever that guy's taught you, he's taught you a lie. He's taught you discretion. You can't teach discretion. Discretion is you. Yeah. Unless there's mechanical rules, it cannot be replicated. If it can't be replicated, it can't be automated. Therefore, you're going to need to prove it to me with a 3-month P&L that it works solidly for a period of time, because otherwise it's just discretion, isn't it? I could also flip a coin and go long and short and DCA into that move, because it's a 50-50 chance, isn't it? Discretion. Sorry, I don't want to put the knockers on it, but you've probably been asked this a dozen times. Am I going to go? No. But is there a reason you haven't learnt how to code in PineScript? I have learnt how to code in PineScript. I just don't use TradingView. Especially now they have a store. Yeah, I can convert all my stuff to PineScript and put it in a store. I just don't use TradingView. I code for myself. I don't code. I don't do this to make money as a living. I do this as a side hustle to make a bit of extra cash on the side, which basically pays for the server, pays for all of this stuff that I've built and host, and this is all this free stuff that I do. Yeah, it all pays for all this. It's not something I make a living out of. So if I set up, what will happen is if I set up a store on TradingView and start selling all my stuff on TradingView, what I'll get is 500 new people wanting support. I don't employ anybody, it's me. So for me, adding an additional marketplace is the biggest, worst headache I could possibly imagine, because it's just going to create tons and tons of questions. I'm now looking at my inbox and I've got 47 DMs. So I come off stream now. I want to get a product launched onto the marketplace, but I've got 47 people to talk to first. So I mean, I do coding PineScript, I code in C#, I can code for all platforms, and I do code for all platforms. I build things for people. Yeah, so I mean, I've got this MT4, MT5 coding, but I do also code in everything else as well. But I just don't want to have more channels. I build in this because I trade in this and this. Yeah, MT4 and MT5. I'm flicking between the two as if you can see the difference. One is MT4, one's MT5. You can tell that's MT5, can't you? But yeah, so I can make stuff for it, but I didn't realize I had a store now. So it's called a store or marketplace. I got a merch. Because what you used to have to do with TradingView was you had you had to basically have people authoring with TradingView, and you would you'd allow their account to use your stuff. It was all very complicated, and they haven't got a marketplace, have they? TradingView script marketplace, Pine indicators. Is that it? That doesn't look like it's part of TradingView though. This isn't part of TradingView, is it? So that's not that. I don't know. Send me a link. If there's a marketplace, I mean, I can do. Loads of people have asked me to put it on TradingView, put my indicators onto TradingView. I just don't use it. So all it's going to create is support for me. And I haven't, I don't sell enough stuff to warrant employing someone to help me do it. They have a store open for people to sell their indicators. Just select indicators and you will see the store section. See, I don't even know where that is. I don't use it. But why does it not come up then? When I type that in. TradingView store. Merch. Send me a link. Because I can't find it. If it doesn't appear on Google... you'd imagine it would. I don't know. Going by sea. I'm not in going by sea. Do you know what? My new what's it called? Internet provider in my new house. I appear all over the place. Every time I do a search, I might be in London, Worthing. I've been Hassocks occasionally, Hurstpierpoint, Burgess Hill. It's weird. They're obviously using some kind of rotating IP system where basically whenever I go online, it goes, you want delivery to London? Like, no, I don't live in London. So, and it's obviously affecting Google as well. It's really annoying. But anyway, there you go. So yeah, send me a link, Sam, on Discord, Telegram, or message me through the website. Either of them. I'll be interested to have a look. But I have created a couple of TradingView indicators, and it's really simple PineScript. So it's actually way simpler than MQL. So it's not a problem converting stuff. it depends what the support's like. If it's something that needs support, might not be interested, but if not, don't know. Right, DAX is breaking down, so I'm going to stop out on those. It's going to be one of those mornings. So ORB is likely to fail this morning long. So the option is to go short and try and trade it back down into the open today. But yeah, a bit of a choppy day today. It is Friday, so looks like we might be just going into rotation. Right, I'll be back this afternoon for members at 2 o'clock. We will trade the NASDAQ, the Dow, and see if there's any trades on gold this afternoon. And obviously we'll do the Q&A. We'll look at the week, do all the FX pairs, position trading, all the usual stuff. All right, so have a good day. If I don't see you this afternoon, otherwise I will see you this afternoon, and we're back on Monday. Have a good day.
Click, clack, charts attack, candlesticks, they spark the track. Lead move silent, market crack, profit stack, no turning back. Opening range, that's the game. Breakout hits, never the same. Algorithms play, but he rewires the frame. Banks whisper his name. Flipping forex, indices flex, numbers dance. What's coming next? Green lights flash, P&L stretch. Risk managed, he never sweats. West fact buzz and traders peep. Lessons deep, no time to sleep. Market's a beast, Lee's got the leash. Feast at the feast, his game's elite. Market structures is domain. Leads the king, they know his name. Breakout sharp, he fuels the flame. Trading charts is not a game. Pip by pip, he stacking high. Mean reversion, banks comply. Leads the reason markets run. Leads the reason markets run. Candles lit, wicks on fire, spread so tight the stakes get higher. Institutional flow, he's the supplier. Positions held till charts retire. Data feeds, news he reads, Fibonacci maps to see. Supply demand his mind exceeds. Trades ignite like lightning speed. Stop loss tight, take profit wide. Least precision, unmatched drive. Liquidity pools, banks coincide. Retail's blind, leads the guide. Charts unfold, the stories told. Entry bold, accounts in gold. Trade by trade, the wins are sold. Market alchemy, legends mode. Whoa, 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 whoa. Lead the reason markets run. Lead the reason markets run. Lead the reason markets run.
Charts and candles, the digital sheen. Open in range, his weapon so keen. He's the structured trader, a market machine.